Hi, this is A.K. Asnani from Smart VRC, Bhopal. Today's module is Extra Insights. Smart Gains is the flagship product of Smart VRC, and so much so that in fact in early days the name of the website itself was smartgains.biz. It has two parts. One is the pick of the week. Every week we provide one advice with medium term perspective, and the Smart Billionaire Picks is a collection of stocks picked from pick of the week only. But we have a restriction of about 18 to 20 stocks. We do not go beyond 18 to 20 stocks. And also here also the changes, if any, are permitted only on Wednesday. Then why this product is so popular? And there are reasons for that. And the topmost is the very disciplined and the outstanding performance from both of these features. The second part, that is a Smart Billionaire Picks, is represented by blue colored line here, and below this red colored is the BSE Sensex. As one can see, SBP has outperformed, far outperformed, and exceedingly did well over this long period of more than 19 years. And this outperformance gap is increasing steadily. Interestingly, since 23rd March 2020, SBP has outperformed by Sensex by 100%. During this period, Sensex has gained 43%, while Smart Billionaire Picks has gained 85%. And this was started with rupees 1 lakh on 30th of May 2001. Had one invested and continued to make changes as per our advice, the present value of 1 lakh has grown to 80 lakhs today. The same amount had been invested in BSE Sensex would have been worth about 10.5 lakhs today. Now this is a very interesting chart which shows since 1st January 1990 to 20th of October 2020, and this shows the pullback in Sensex versus the Smart Billionaire Picks. And as you can see, every time the pullback has been better than the previous one for Smart Billionaire Picks. As you can see here and here the yellow color denotes the pullback of Sensex from the last low to this high. There was a gain of 277% in Sensex, while in SBP there was a gain of 388%. Same thing happened. In fact, we performed better. Outperformance was better than the previous one, and wherein during this period SBP gained 581% against 371% in Sensex. And the best part is the recent one, when from 23rd March to till date, Sensex has gained 43%, while SBP has gained 85%. 85% gains in a matter of only hardly 7 months. In every recovery after the crash, SBP has far outperformed the BSE Sensex. Not to mention that during this last recovery, the latest recovery rather, the gains of 43% in Sensex has been highly contributed by a single stock, and that is Reliance Industries, which has gained 146% during this period. So here is the same chart again, and as you can see, the rate of pullback is way steeper than Sensex during post 2008-9 crash. Subsequently, during 2014 pullback, you can see the angle of inclination of SVP is far superior than BSE Sensex, and the same trend continued during 2016 to 2018, and last but not the least, in the latest one, that inclination is fast approaching, almost it is 80 degree or 85 degree as compared to the Sensex of about 15 to 20 degree. So that is the kind of returns we have generated, and this is how we have been able to generate more returns. These are the boosters for our portfolio. Whenever the crash has occurred, post crash, our SBP has performed far better, and that is how this goes on compounding. Success compounds. So what was the booster? What we did when the market was falling? That is precisely the reason why there is such a sharp spurt post crash, because we do something in our portfolio. Every time we do something different, something more enterprising one. Now this is the period from February to April 2020, wherein we have reduced the exposure to finance sector from 27% to 4%, and this was more so after 15th of March, because we knew very well that finance sector will be the most hardly hit sector. And subsequently, the money generated from this reduction in sector exposure has been invested in pharma and specifically specialty chemicals. Now interestingly, finance has very high weightage in this BSE Sensex as well as NSE Nifty, while pharma has comparatively low weightage and specialty chemical has no presence. And you all will agree, specialty chemicals, many stocks have almost doubled during this period. So it started on 30th of May 2001. SBP has multiplied 79 times, and with absolute percentage change of 7,894%. During the same time, BSE Sensex has gained 1,007%. In terms of CAGR, BSE Sensex has gained 13.19%, while SBP has gained 25.34%, and this is for 19 years and 6 months. 25.34% CAGR means doubling your money in just 3 years and 22 days. If it continues this growth rate, if SBP continues at this great growth rate, then an investment of rupees 10 lakhs will turn into 3.2 crores in just 15 years and 6 months. So what is the secret behind this stupendous returns of 25.34% CAGR? First is mastering emotions. Without having control on your emotions, it is just not possible for an investor to generate high returns. Not only high returns, even survival is at stake. Secondly, portfolio management. As you must have seen what we did. We did changes in the sector weightages. So that played a very crucial role in giving better returns. Third is picking a winning stock. Merely changing the sector exposure will not do. You have to include the potential multi-baggers in your sector picks. And if you have these three qualities, as we have seen in case of SBP, it can give you 25% CAGR returns, and with these kind of returns, an investment of mere 10 lakhs turns to 3.2 crores in a matter of only 15 years and 6 months, and that may lead to financial freedom. So we have prepared a series of 54 videos, each of about 20 minutes, to cover all these 4 aspects, and we have grouped it under a new scheme named as Smart Insights Pro. So this is Smart Insights Pro. Total time length in case of financial freedom is 180 minutes. That is the lowest one, and in case of stock research, the watch time is the highest one, 421 minutes. Coming to the next insight, and this insight is from a stock, Aarti drugs, which first time we advised at rupees 131, and since then it has never looked back, and we have discussed this stock many times in our webinar. Company kept on delivering eye-popping results and unbelievable results, and that too during a period of COVID. So this was the time when the company declared 3:1 bonus, and at that time share price was something about 560 rupees. So whatever price I am saying is adjusted for the bonus. So at about 560 rupees, company declared 3:1 bonus, and with this news, stock price jumped to about 820 rupees, wherein we advised to exit. Yes, this was the point. This was the day when the stock was in upper circuit and we advised to sell. Many of our investors, many of our subscribers, they were not willing to sell because the stock was in upper circuit. Then what caused us? What made us to decide to sell? We will see this in later slides. And then the stock price retreated, and retreated by good amount. It came to about 720, 730 rupees, and then there was a sudden spike. Why this is a spike? This also we will discuss, because there was no such event as far as the company is concerned, and share price for a moment crossed even 1000 rupees, and thereafter it has come down to about 760, 750 rupees. Why this retreat? So these insights we shall provide you in the subsequent slides. Before proceeding further, I would like to show you the highlights of the newly launched product, Smart Insights Pro. I am delighted to share with you the subscription prices for Smart Insights Pro. It varies from rupees 1400 for portfolio management to rupees 2900 for stock research, and this subscription shall be valid for 6 months. And also I am delighted to offer you 2 months subscription to Smart Gains free. Yes, worth rupees 785 of Smart Gains subscription shall be provided to all the subscribers of Smart Insights Pro. You will get an opportunity to know the shares in SBP, which is delivering 25% CAGR from last 19 years. In case you are already a subscriber to Smart Gains, then your subscription shall be extended by 2 months. Coming back to the insight of Aarti drugs, stock was advised at rupees 131 and it was based on the just quarterly performance, and subsequently company delivered very good performance, exceptionally good performance, and then at this point of time 3:1 bonus was declared. Subsequently stock went up by almost 50%, and as we all know, bonus is merely an accounting entry, and stock going up by 50% was based on the enthusiasm in the market regarding the 3:1 bonus. And when the stock was here something about 800, 820, and we advised to sell, and you will be surprised to know that at that point of time stock was in upper circuit. So first quarter performance was exceptionally good, but still we decided to make an exit. And what was the reason? After the declaration of first quarter performance, management categorically state that the first quarter performance was exceptional. For the full year, it expects net profit growth of 80 to 90% over previous year. And now let's look back for the previous year. For the previous year, net profit was 135 crores. Thus, with a 90% jump for the current year, we expect the management, as the management said, based on that, there should be a profit of about 256 crores, against which the first quarter annualized net profit was rupees 292 crores. So it is very clear, first quarter performance was really exceptional, and for the rest of the year, for the rest of the quarters in the current year, performance was not likely to be as good as in the first quarter. So based on these figures, 256 crores, we arrive at an EPS of 27.46. So the ruling price at that point of time discounted this EPS by 30 times, and that too in advance. The results are yet to be declared for the full year. Still there are 6 to 9 months to declare the full year results, and stock is already commanding a P of 30. So that was the reason why exit call was there. So after this, share price went up to about 850, 860 levels. Subsequently, stock price reacted, and this was a natural phenomenon because there was a steep rise after the declaration of the bonus. Reaction was expected, and at this point of time, marked as B, investors got the shares credited into their demat account, but those shares were still not listed. Many of the investors, especially the new investors, they didn't knew that these shares first need to be listed, then only they can sell. But they sold it in a hurry, and subsequently they came to know that they cannot sell, so they have to cover up, they have to buy again, and this led to a frenzy once again, and stock price went beyond rupees 1000. At this point, somewhere at this point, that is C, these shares, these bonus shares were listed, and now investors can sell, and That is the reason why liquidity increased by 3 times due to the bonus shares in 3:1 ratio, and large number of investors, they sold off their holding, and that is how the share price came down to this point. Story unfolds further. Second quarter results were declared, and these were almost in line with the management guidance for the full year, and no surprise. Of course, with respect to the first quarter, the results were slightly subdued, and also the management declared that the company intends to raise 350 crores. The mode of raising this amount is still not clear, not declared by the management, and so the story continues. So this was the insight I wanted to share with you, and these insights give you a lot of confidence to remain invested or sell your holding. That all depends how you value the stock, but it gives you strong conviction whatever action you want to take. This analysis should not be construed as any type of advice, and this was only a study just from the educational purpose to provide investors the insights. It is not the money power or the money strength that determines the survival of investors. Yes, I am not talking about generating money, but even the survival of the investors is not dependent how much money you have invested, or not even your intelligence, but it is the skill to manage emotions, ability to adapt to change. Thank you very much for sparing your valuable time. Have a good day.